Good afternoon, everyone, or good morning, or good evening, wherever you are. Welcome to the third webinar on WACEO. And today we're going to be looking at DeFi and DAOs through the lens of law and governance. We are very humbled and excited to have Dr. Anne-Sophie Klutz, who's an affiliate lecturer at University at Cambridge and also head of legal at Origin Trail. And we're going to get into some pretty exciting topics. Just a brief intro into who WACEO is. We're a non-profit organization established in 2018 with the goal of helping decentralized ledger companies to operate within compliance of regulatory frameworks. And one of our main goals is to provide DAOs with tools necessary to be in good legal standing and to be acknowledged as legal entities. We do this by pulling the members of our association and the service providers as well, pool their resources to jointly lobby for their interests with regulators. And the purpose of these webinars is to invite DAO activists and those actively working in the industry to discuss and provide information and perspectives to newcomers and experienced individuals on happenings in the DeFi and DAO sector. As I said, today we are very, very, very happy to host Anne-Sophie, who, as I said, is an affiliate lecturer at Cambridge, where she teaches a course on the legal aspects of DLT and digital assets. So two topics that are very, very important in this space. And she obtained her PhD from Cambridge, where she previously practiced company and competition law in international forums, and she held an LLM from Columbia Law School. I was doing an exchange doctoral research at Harvard Law School too. As I said, she's head of legal at Open Origins, and she also has a weekly newsletter on crypto and law. So very, very busy individual and more than capable of giving us some really interesting insights when it comes to law and governance. So, how was that introduction?
Now I better live up to it.
I'm sure. I've read a lot of your work actually, and it's great. So, I think one of the first questions I wanted to ask is, what does DeFi mean to you?
The definition question. Those are the difficult questions. We've had long discussions. I was one of the content contributors for this DeFi, the policy toolkit that the World Economic Forum made. And we had these very long discussions within our working groups about how do we define DeFi, just how decentralized does it need to be, and what should be decentralized, and just what's the level on the spectrum of decentralization. So centralization, where's that cutoff point? And there were some very strong views on different people, different opinions, and in the end, we settled on a definition that I'll just repeat here, which I think makes sense to start saying DeFi is about financial services in a decentralized way. And what is decentralization? And we came to the conclusion it must be obviously a permissionless blockchain at the very bottom, and then any structure in between has to be, we call, sufficiently decentralized. And has to be, decentralization not just in terms of governance, but also in terms of open source availability of the source code. So we had a few building blocks of that definition because we first of all decided defining exactly what decentralization is. We don't know yet where that cutoff point is, but we certainly know what it is not. It is not anything built on a permission blockchain, and it cannot be anything with proprietary software. So financial services using blockchain technology, permissionless blockchain. And then anything that's open source and that with governance arrangements that are at least sufficiently decentralized. We left in the middle what that was. That's how we define it. But you can read a much more eloquent definition in the World Economic Forum report. See how we settle diplomatically on a group consensus.
Yeah, no, it's amazing to hear the thought process behind that, because it shows that there's a clear connection between governance, like corporate governance, in a sense, like how all of the stakeholders interact with each other and how that governance is decentralized, and then also on the IT side as well, right? like both of those have to have an element of permissionless and decentralization for DeFi to actually function as DeFi.
Yeah, absolutely. And I think that's one of the questions that I receive from people who are not familiar with DeFi. Like, what is this decentralization? Actually, we're starting to think of decentralization of what? Of, as I said, the governance, but also the IT itself, the code itself.
Yes.
So there are many different angles at which we can discuss decentralization, and it probably has to check the boxes at different angles and all these layers.
Yeah, definitely so, because especially because of a shift that we're seeing. So obviously looking at it from more of a historical point of view, at the beginning we had mainly layer one infrastructures, right? So we had our Bitcoins and we had our Ethereums. And these were layer ones because it allows dApps, so decentralized applications, to be built on top of them. And these dApps didn't really have a lot of community, didn't have a lot of governance happening on them until last year during DeFi Summer, where they had the release of many governance tokens. And this really started pushing towards understanding what actually is decentralized governance. And from your opinion, obviously, as we said, there's different different decentralized governance for layer one and layer two. Do you see any core differences, especially because layer one is more public infrastructure, and then layer two can be for profit businesses?
It's a very good question. Also, how do the two how do the two interact? If there's a governance problem at one layer, how does it affect the other layer? And I think some of the questions may be different, but at the same time, some of the questions are very similar. Like where you talk about any of the layers in the blockchain infrastructure, or you talk about companies or any other type of human association, you're trying to pool resources from different people to come to a common goal. And that common goal can be for profit, can be not for profit. That goal can develop, can evolve, obviously, and we have to make sure that the governance arrangements allow that goal to develop as needed. So then the question becomes, how do you manage these different pools of, these different resources coming into a common pool, and how do you have these internal governance mechanisms to say who's doing what, and what if there's a disagreement, and what if people come in and out? And I was thinking about more DeFi governance. I haven't looked that much into the layer one governance discussions. It seems a little bit different,
Yes.
as you said, because just a different aim that both layer one and layer two or anything above has. At the same time, some of the questions are very similar, I think, and this question of how do you deal with the pooling of resources from different people, and how do you make sure that we think about the conflicts of interest that there may be, or just a conflict difference of opinion, or just people coming in and out. And that's why, for me, coming from the background I'm coming from, which is a very traditional company law, competition law perspective, and obviously by thinking about the theory behind companies and firms and what does that mean, for me, it immediately made a click with what's agency theory and company law. And I'm not saying that DAOs or DeFis are companies and we have to think about them in the same way. We don't. At the same time, there may be lessons learned from decades of research into how do you deal with agency costs, how do you deal with these the problems that we see arise once you start pooling resources, whether it's for profit or not for profit. But if you have many different people bringing in some resources and wanting to take out some resources, some of those questions have been addressed for a long time in corporate governance discussions. So I was thinking about, is there any lessons learned from traditional company law, corporate governance literature that may be relevant also for DeFi and DAOs? And then we don't want to import perhaps the mistakes that were made in corporate governance or the things that don't work. But at the same time, the bigger principles that I think about human interaction for a common purpose, we may be able to learn something from that. And I think in some of the DeFi discussions, which again, layer two or higher, we're not talking about layer one, but some of those discussions, I think, are maturing now to a level where we see a bit more nuance in how should we govern those. And the relatively crude majority rules that we have right now in most of these dApps when it comes to governance tokens, is that really the best solution? Is that what will help us achieve that common goal with our pooled resources in the end?
Yeah. I think the point that you're making about agency theory is something that's not only seen in corporate settings, right? Agency theory can be between a parent and a child, between a lawyer and a client. Agency theory it cuts across like many different fields. And as you said, it's one of those principles that can be used in DeFi organizations as well to just try to understand some of the issues. And it would be great to get a definition, just a brief definition of agency theory for people that might not understand it, just to bring everyone on the same page.
Sure. So as Nathan was saying, agency theory can be used across many different fields of human interaction. I come from it from a company law perspective, and there we define agency theory as the theory trying to figure out what you do when you have some people who have to rely on other people to get something done. And in the context of a company, that would mean, for example, if you're a shareholder and you rely on directors and managers to manage the company to give you a return, that's an agency cost. So it would be a cost that traditionally that's how we see it. It's a cost for a shareholder to have to rely on directors who may have their own interests and may work for their own reputation rather than for the reputation of the company or for the profit of the shareholders. So we see shareholders as incurring an agency cost simply because they have to rely on the work of directors, others, to make a return for the shareholders. And actually in agency theory and company law, there are actually three big groups of agency costs that in traditional company law theory, we discuss. And I mean, agency theory in company law, I think itself is very impoverished and is slightly outdated. And there are many competing theories trying to refine agency theory as we traditionally see it. And I think DeFi is actually picking up on some of the shortcomings of traditional agency theory. But they're typically in the standard company law theory of agency, there are three big categories. One is agency costs or the potential conflicts between shareholders and directors or managers. The second one is between minority shareholders and majority shareholders.
Yeah.
And the third one is about anybody inside the company, managers, shareholders, versus anybody outside the company. It could be creditors, it could be third parties affected by the company, it could be the government trying to raise tax. So there are different types of groups of people potentially in conflict with one another or potentially aligning. And agency theory is trying to find out how can we give financial incentives, economic incentives for those groups, even if their if their interests may not align, to make sure that we give incentives that they align a little bit more, or that we can give tools of one group to monitor the other group. For example, in DeFi, a big issue is minority governance token holders versus majority governance token holders. Is it enough to say in DeFi we just have a majority rule, period? Or do we say, well, actually agency theory and company law has come up with more nuanced ways to protect minority holders. It's not just a crude majority rule. So I think even though agency theory and company law itself is, I think, impoverished and slightly outdated, and I think DeFi can definitely help update company law and corporate governance because it makes different assumptions and it shows things can be done differently. At the same time, perhaps the other way around, DeFi can also learn from company law and what we've learned in the literature about corporate governance and these different types of agency costs and how we try to mitigate, if not take away some of these conflicts between different groups working together in the company to make things work.
This is really, really amazing because you start to see a Venn diagram appear of the different actors involved in any DeFi organization, right? So you have, as you said, these token holders, these governance token holders that have governance rights over the development of typically the IT infrastructure and also the corporate infrastructure, right? They can change things on the IT level and the corporate level. But there's different types of token holders, as you said. There's token holders that actually work directly for the development of the organization or work on the business development of the organization. And then there's those that are just token holders that have no, they don't work every day on the protocol or the organization. And then the second group that you said are the smaller token holders. And then you've got bigger token holders as well. And then the last one is really, really interesting, and that's the token holders and people outside. So there's a lot of discussions right now, especially with how some of the laws have developed this year. This week we got some updated guidelines from FATF, for example, on how AML, so anti-money laundering and transaction monitoring, should be done within DeFi, right? Within crypto assets. And that relationship between organizations and outside participants come into play there as well, which is quite interesting too. So in all of these different areas of agency theory that we have in traditional corporate governance, there are some similarities, definitely, or some the principles can be also applied to DeFi for sure, and that's really quite exciting to be able to walk some of the learnings, right?
Absolutely. I think that third type of agency cost, insiders versus outsiders, it's something that the law has struggled with. And that's why in company law, basically the attitude is company only deals with the insiders, and everything else like environmental impact or other impacts, we just leave it to other areas of law. In DeFi, I haven't seen much. Well, there's this discussion obviously about how can smart code of certain DeFi dApps affect outsiders, but I haven't seen a very mature discussion about that yet. And then, of course, the tendency of lawyers is to say, well, if you're not dealing with it internally, then we're just going to impose laws externally to make you care about it. So the three different agency costs. If you think about the most discussion I see right now is the second one, minority versus majority. I've seen like what the paper I mentioned to you is Vitalik Buterin's paper on Beyond Coin governance, where he raises some of those issues and puts them in a very nice systematic analysis. But then the first one, directors versus shareholders. Directors, managers, who are they in DeFi? And of course, if you take on too many roles or too much responsibility, you risk being seen as if you risk incurring more liability risk. So I can see in a DeFi the tension between saying, okay, we don't want to take on many roles or much responsibility to limit our legal liability. At the same time, that means, like we saw with Compound, if something goes wrong and you have time delays and nobody has that power, that key to say, okay, I'm going to intervene right now. Then you see exploits that can drag on for days because nobody's really in charge. So that first agency cost of, okay, who's managing things and who's just a token holder, passive token holder. There are things that we're trying to do with that, but perhaps not fully figured out how that translates to DeFi when you don't really have anybody in charge in the same way, perhaps depending on the level of actual decentralization. And then the third one, as you mentioned, insiders, outsiders. I haven't seen much about that yet, but obviously legislators are coming saying we're going to just throw things at you if you don't deal with it. So the discussion I've seen mostly is the second type of agency cost, minority versus majority, where I think we're trying to figure out how to go beyond this relatively simplistic rule of majority wins, which means those with most resources typically can sway the votes their way. Not always.
Yeah, exactly. Well, one of the exciting things about DeFi is the fact that it's so composable and transparent as well. So there's a lot of things that we can actually implant from law into the code itself, so that the organization just automatically encompasses certain areas of law. And before I go into those features, I think one of the really exciting things about the first group that you were talking about is the fact that in decentralized governance, it's often related to open source, free and open source governance. And this is a really, really interesting parallel to have as well, because in open source governance, the developers, as long as they use the right IP licenses and they're not creating nefarious code, so code out of bad will with negative intentions, they won't have any liabilities for the code that they upload to this open source protocol. Because as we said, at the end of the day, the IT structure is going to be open, it's going to be permissionless. So to an extent, those developers don't have any liabilities for anything that goes wrong. But at the same time, and we saw this actually 2 years ago with, actually even last year, I believe, with the Black Thursday incident in MakerDAO, where the peg that they had was breached because the price of Ethereum fluctuated so much, and a lot of the vaults got liquidated.
Exactly.
Even though the developers had no liability in the sense of they didn't create any nefarious code, the suitors that were trying to bring a case against them brought a case against the foundation for saying that this is work that they've done, and therefore they had a sort of contract with the Maker Foundation that this would be upheld. And this is where things get a little bit, I say a lot of bit interesting, because with DeFi, you don't just have the IT layer, but you also have the corporate layer as well to an extent. And right now, we haven't figured out whether we're going to use the same language as we do in free and open source software, where these people, where developers are called contributors, are also the people involved on the more BD side, also just free and open source contributors as well?
Yeah, that's a really interesting question. I think instances like that, as you said, the MakerDAO and the lawsuits that come from it, and the same path with Compound, or some other instances we've seen where some DApp developers are suing teenage hackers and saying, we're going to give our case material, our evidence to the police because we need some help here because you're going against the ethos of our community. So there's always that link back. You have the software, and somehow it can link back to, as you said, the legal circuit, the legal proceedings that we're so used to. With Maker, I think what we see in MakerDAO and lawsuit, obviously that just summarizes a big question. As you said, there's a connection between perhaps a foundation or a corporation, and then there's an open source code, and there may be gradual decentralization of governance as well. And that's different from what we see in most open source code, as you said, where people are just contributors to something, but not necessarily this corporate entity in the background that set it up and then perhaps disappears, perhaps never really disappears. Even if it disappears, were the people in that entity still the largest token holders who are still contributing more to governance? And I think the recent questions that the US Securities and Exchange Commission raised on Uniswap Labs may also be with that question in mind, like how much difference is there between Uniswap Labs and Uniswap, the DEX? And of course, as a company lawyer, you always think about you make a distinction between a person setting up a company and the actual company. But we normally make this wall between the person behind the company and the actual company. But then there's sometimes instances in which we say you break down that wall if the company running, if the person behind the company is actually using the company as a scam, or is not actually viewing the company as something different from them personally. I think that's same. So in company law, we call it piercing the corporate veil. If it turns out I'm using my personal bank account to pay my company bills, and I really don't use the company for its purpose as a separate entity, I'm just using it as an extension of my personal bank account, then my separate entity of the company and me would not be respected. And probably in DeFi and DAOs, I suppose regulators are looking at similar questions. Is there actually separation between the two? And how far does that separation go? And saying there's an entity that's being dissolved, is that enough to say, well, the governance now is also decentralized? So as long as the governance is not decentralized, it doesn't matter whether there's a foundation or a company behind it. Probably regulators will then say, well, there's still enough control over the software, which is very different from what we see in traditional open source software. I'm not sure what will happen with the Maker lawsuit. The same thing, I don't know what will happen with Uniswap Labs, that questionnaire or the questions from the SEC. But that's obviously the next big question for how far are we using our company law concepts onto something that's actually quite different. It's similar in some respects, it's also quite different. And you see already I think what you said with FedEv trying to say, well, there must be something or someone centralized behind all of this. We cannot accept yet that's fully decentralized. And often that's the reaction. It cannot be fully decentralized. There must be humans. But I think if there's a true disconnect, if there's a true distinction between the people contributing open source and governing and an entity that may have been there is still there, we should respect that. What they probably won't respect is at a certain point, not just back in time there was somebody developing it, but it's still clear that one person actually controls it. And that's what we see with some laws being introduced in the US, trying to define what is that level of control that we don't accept as separate enough.
Yes. And it's interesting how, especially because we're on the talk about token holders, right? How this is going to probably be linked to how much tokens they own as well. So typically when I'm working with any DeFi organizations and they've been looking at the distribution of their tokens, this is an important question. And a lot of people have used the best practice of around 20 to 25%. Because after that, it means that the original team has a lot of control, a fair amount of control over the development of the organization. So yeah, this is it's going to be interesting to see on both the economic side and also the operational side, and how that balances out too.
Yeah, and I think the 20% is probably, as you say, what people are looking at as a cutoff, saying somebody has more than 20%. And 20% is also a number I see in some bills, some draft laws, where they say 20% is a cutoff point. When you think about 25%, again, that's a number that's very important in company law. When you have 25% or more of the shares, that means you can block certain important transactions in the company. So most of the time you have simple majority in company law, but then there's certain transactions that require 75% or more vote from shareholders. So 75% or more of the votes have to vote in favor of something to pass certain important transactions in a company. So that means with 25%, if you have more than 25%, you can block any kind of transaction, important transaction, that requires a supermajority of 75%. So I can see why that is also important at DeFi, saying 25% really means you can make things stop. You can, especially if there are many passive token holders, as you mentioned before. It's the same problem we see in many companies, publicly listed companies, that 25% is you can have a lot of control with just 5%, because so many token holders, shareholders, do not actually bother to vote. So 25% is a very, very, that means you have to have a lot of shares, and that definitely probably qualifies as control. But even with 5%, for example, it may be enough to sway votes either way, because there's so many people not voting.
Precisely. And this is quite interesting because it's a slight segue from the first category to the second, right? Where we're talking about the relationship between the builders and the non-builders, and now we're looking at the token holders as well, and the power dynamics there. And one of the really interesting things that you've obviously picked up on is like this economic power, and like how there's different types of shareholders that have different economic power. And a phrase in politics that's typically used here is called plutocracy, where depending on how much economic influence you have, it directly is proportional to how much political influence you have. And this is obviously not always the best position to be in, because as you said, a lot of the time, as we're talking about the next category of agency theories, sometimes the minority token holders, their interests might not necessarily align with the majority token holders, and they might be using their power for selfish reasons rather than for the good of the organization itself. And this can lead to quite interesting issues that can happen. And I was wondering what your thoughts are there.
That the one thing that comes to my mind is this recent discussion that we had on the DeFi educational fund in Uniswap, where the Harvard Blockchain Student Association basically wanted to propose that funds from uni tokens were used, and quite a lot of uni tokens would be used to allocate to a new lobbying fund in the US. And it turned out that that vote in the end seemed to have been supported by the big token holders, the big VCs and some others. And it seemed like most of the minority token holders, at least at earlier stages of the voting, were very much opposed to that idea of using so much uni tokens to fund that kind of lobbying fund, especially because the concern for minority token holders was, if that lobbying fund basically lobbies in general, that means that obviously you lobby for everybody. You don't just lobby for Uniswap. It was supposed to be a lobbying fund for DeFi in general, which means it will indirectly benefit all of the VCs that vote in favor of it. And so the smaller token holders were saying, wait a minute, why can't Andreas and Horowitz not just fund that kind of lobbying for themselves? Why do they have to use uni tokens? So if big VCs delegate their vote to somebody like the Harvard Student Society and the blockchain initiative there, and then that helps to sway that vote to say, okay, we're going to use 1 million uni tokens to fund that lobbying fund. Minority holders were quick to point out, well, this vote passed basically with a couple of big wallets, a couple of big whales who pushed this through at our expense. And if you compare that with company law, you would still have, in company law, a shareholder can be self-interested. Any shareholder can vote the way that they want. They don't have to take into account the impact on the minorities. With some exceptions, there are a couple of instances where majority rule is mitigated, at least with disclosure, with some other rules that we have. So it's not just this crude majority rule, but I think in a corporate context, it's still typically majority of shareholders can push through the vote. And depending on how many shareholders vote, it can be a relatively small group of shareholders that can push things through, and they can be purely selfish. But in DeFi, because things were so transparent, I was actually positively surprised to see how that discussion about that fund, even though it was controversial and you could see it was creating tension at the same time, the fact that so much more was transparent. It was transparent who was voting, it was transparent, where the funds went to, who was on the committee, how the committee, and when the committee exchanged uni tokens to a stable coin. There was so much more transparent than what I've seen in corporate governance settings, that I felt that really offsets from some of the perhaps concerns about a crude majority rule that we have in DeFi that was complemented and perhaps offset with that transparency, and that the fact that you can see, okay, one of the committee members sold their tokens just before the DeFi fund would do. And so all these things that came up in discussions that I think in a traditional corporate setting, you just wouldn't have seen. You wouldn't have been aware of.
Yeah,
so
exactly.
DeFi can show to corporate governance, like things can be done differently, and the transparency we see in DeFi should tell our corporate governance professors and practitioners, perhaps look at DeFi to see how things can be done differently.
It's as you're saying, it will be really interesting to start seeing some of these case studies actually analyzed in next to traditional corporate law, actually, and I think it will soon, actually. Yeah, and what's interesting here is that, as you mentioned, this is actually in even though it's in an open and permissionless way, and there has to be direct transparency once the decisions have been made, there were clearly some backdoor discussions that happened before the original proposal was put forward. And this is something that we see in every interaction in life, right? Especially when there's sensitive topics, sometimes you'll discuss it with one family member before you speak to it with the rest of the family members. Even in business, sometimes there's things that you discuss with one person in a lunch or a coffee before you bring it to the rest of the team. Politics as well, it's the same everywhere, right? And the question of whether this is right, if this is still ethical for these backdoor discussions to happen, and whether it's just a manifestation of just humans needing to have lower level consensus before they have high level consensus. I always remember saying that most decisions that happen in meetings are made before the meeting even starts.
Certainly. Definitely. And I think what you're saying is very important, and that may have expressed very well why so many smaller token holders were frustrated with the DeFi education fund discussions, but also elsewhere. And some of that frustration may have been warranted, some of that may not have been warranted, and may have been some misunderstandings. And at least there was this open discussion at least at some point there was a discussion, and I've never seen that kind of this in-depth discussion in a typical shareholder meeting where you have paperwork, you check the boxes, you make sure you don't say anything wrong for liability reasons. But what I see, at least in DeFi, even if those things come up, it's easier to see it on chain. And then when it comes up, it seems to be more vigorously discussed. And it seems like it's a better way to hold people accountable. Perhaps sometimes people go too far and make allegations before anything is being checked. But at the same time, I think that level of transparency is something that we're missing very much in some corporate settings. And to come back to what you're saying, we still see in DeFi these backroom dealings, and that is a frustration, I think, for many, because who are the people making the big deals? Typically the bigger holders, at the expense potentially of the minority holders. Perhaps they're acting in the best interest of everybody, but how do you make sure? And at least in a traditional corporate setting, it's not just the majority token holders. If they appoint directors, they may have special, or if they are directors, they would have directors' duties, and they have all kinds of limitations on how they can exercise those duties. We don't, if a big VC is just a token holder, they're not a director because there's no company. They're not subject, they're not bound by the same director's duties. So perhaps even though DeFi has many advantages, I think, in terms of transparency, and at least at this point, the level of discussion we're seeing, there are also gaps, as we saw in some instances where we realize that these backroom dealings are still happening. And then if the only thing we have just saying on Twitter or elsewhere, we don't like this, or the governance community forum, we don't like this, is that the only thing we have? That may not be good enough for many people. I mean, as you said, and maybe because it's so modular, we may just see money move from one DeFi project to another if they're not happy with how things are run. But that's actually there's a question again of exit versus voice. If you're not happy with how something is run, do you have a voice, or can you only exit? In DeFi, I think that we have much more of a voice because we have these online community forums, and there's much more reaction, I think, and interaction, much more dialogue. At the same time, if you see those things happening, big deals behind closed doors, if we think it's not in the interest of the community, do we just exit and make something else?
Yeah, exactly. Because, as you said, forking is part of the ethos of the DeFi space, actually. Even Uniswap was forked initially to SushiSwap because Uniswap didn't actually have this level of governance initially. One of the things that's really, really interesting, based on what you're saying, is that a lot of these issues relating to governance and law, in that sense, because there's that balance between some of the legal obligations that are in the traditional world, which are showing why they were created in the first place, right? Is something that the DeFi Education Fund actually could help to reveal, right? Because the DeFi Education Fund is supposed to be a decentralized way to bring forward some of these corporate governance issues and having a better relations with regulators and legislators on benefits and the pitfalls of DeFi. So, as you said, it's very tough for some of the smaller token holders because they think that money is being taken out of their treasury. But there are actually some very strong public good value that can come from this as well.
And I think the general consensus was indeed that there needed to be more outreach. I think very few in the community would say we don't need to talk to regulators, we don't need to explain what we're doing. So I think that the consensus was very much there. We need to do something. The question was, which funds, whose money are we using to do those, and how much money do we need, and a couple of other things. But I think you're right. That's something that many people realize. If we cannot explain, or if many people who are making the laws and are regulators looking at DeFi as just, how many times have they said it's just a Wild West, it's a casino, it's just this, it's just that. For some of these projects, it may be true, but that's not all there is to DeFi. And so we have to explain what is it, how does this work? But it also means doing our homework and making sure that if there are obvious questions that we will face, or that DeFi develop, I'm saying we because I'm just researching it. I'm not in any DeFi project or any way more involved than that. But I think there is a lot of explaining to do. But it goes two ways. It goes in the way of it goes from one direction of DeFi going to lawmakers, regulators saying this is how it works, and perhaps also looking the other way, like what are the questions that those regulators would be looking at, and do we have an answer? If we don't have an answer, can we make an answer? Can we build an answer? Can we use codes to, as you said before, like encode certain laws or certain obligations into our decentralized application? So it's so far it's been very much two different worlds, not always.
Yeah,
some people have really tried to bridge it, but I think that has led to a lot of opposition, with a lot of strong opinions either way. And that's why I think whether or not the DeFi Education Fund is able to do it by itself, that's a different question, but there is definitely much more room to try to explain things and to learn both ways. It's not a one way. I don't think it's a one-way discussion where we just DeFi people involved in DeFi go to lawmakers and explain how things work, there may also be something that we can learn from the other way. It doesn't mean doing the same things the same way, obviously, but the questions they raise may be questions we have to think about. Like, okay, if you look at in the EU, for example, the regulations talk about governance and risk mitigation. Typically, that's not on the top of our list, and some of these typical governance mechanisms may simply not work in DeFi. At the same time, the question of, do we think about risk mitigation? Do we think about liability? Do we think about governance? And do we need somebody in charge in case of an emergency or not? Do we say nobody's in charge because that's actually decentralization? At least some of the questions that are being asked are questions that should be taken into account, should be taken seriously, even if it means coming up with different answers than the ones that we've seen so far in traditional company law or other traditional laws.
Yeah, really great stuff. Exactly, because even in traditional companies, for example, they have laws, they have policies when things go down. So how does the company react when there's a flood or a fire, like when there's an emergency? And because it's so early in the space, we haven't really developed policies for that in the space. And these things are going to come up more. We are going to have issues when it comes to competition law, even not just on a level layer 1, but layer 2 and dApps above. How do we deal with these? How do we deal with mergers and acquisitions? And this is one of the things that we're really looking at with WACEO as well. Like, what are the different policies and procedures that are needed that we can obviously take some inspiration from traditional organizations, but how do these actually apply to DeFi organizations specifically?
It's a very good question. I think many regulators and lawmakers are grappling with that. Again, to come back to the EU proposed rules on crypto assets, this famous regulation that the EU is thinking about imposing on at least certain types of crypto assets and service providers. And the idea was that the starting point was we're going to have typical companies and we're going to pose typical governance mechanisms on those crypto companies. But of course, then there is DeFi all of a sudden, and DeFi is booming. And then we have to think, well, wait a minute, what if we have an entity or an association that's not a company? And even if a DAO would incorporate as a company somewhere, how to impose governance mechanisms that require you to have clear lines of responsibility and these kind of things? Simply, I don't see that in DeFi and in DAOs, and it doesn't necessarily work the same way. So how do you require them to update white papers all the time when there's so many governance proposals potentially that sometimes not many of those governance proposals make it through? Sometimes you actually have quite frequent updates on governance changes. So who is then in charge to go to authorities and say, you have to update your white paper? So some of these things, the traditional way of looking at things is not necessarily what could work for DAOs. And obviously we see in Australia, for example, the Senate committee saying just last week, we need to have a special legal entity just for DAOs. And I think they're very much thinking along the lines of Wyoming, saying we just can have a specific type of company for DAOs. So DAOs are no longer non-legal entities. They're not just flying around somewhere, but they actually have to be a company and incorporate like a company. At the same time, we recognize they're not a traditional company with traditional hierarchy, with traditional policies. So we have to adapt the rules of the game a little bit for them.
Yeah, that's fascinating. And the only thing I see there, if you don't mind me saying, is that there's some DAOs that can fit into a legal entity type, but there's others that just simply can't. So, for example, I don't see anyone setting up a Bitcoin DAO anytime soon.
To be honest, that was my first reaction as well. But that requires a very active step. You want to incorporate as a company, and many DAOs don't want to, or can't, as you say.
Yeah. Some of for example, in Wyoming, you need 50% of the controlling parties inside the DAO to actually agree to set up a DAO. What if they simply just don't want to? And the law has to facilitate these realities that it just doesn't make sense for them to do so, and for some they might not want to. So how do we facilitate this as well? Because at the end of the day, these are international borderless companies. So we have to actually have a legal sphere for them on more of a borderless level as well, and not just on a national level too. There has to be that level of balance, especially because of how diverse DAOs actually are.
Yeah, and especially as DAOs are now. I mean, they're already DAOs operating, obviously, but I suspect that DAOs will boom much more, and that as there are more DAOs and we see how things go and how it operates, that we will see much more sophisticated discussions, perhaps, than the ones we're having. Like, should it be a company or should it be something else? And I fully agree that just saying, well, a DAO is a special type of company doesn't necessarily, it certainly does not answer all the questions. It may work, as you say, for some DAOs who want to do that, and others, like a Bitcoin company DAO, it's not going to happen. But it doesn't need to, perhaps, because what does the alternative? If a DAO says we're not going to incorporate, then we know there's a risk potentially of being classified as a partnership. But again, not every association of people is a partnership. In Bitcoin, for example, Ethereum, you would have to think about these people are pooling, you have the developers working on something, but they're not the ones actually profiting. And then you have the mining companies on the other hand, and then you have people building on top. But the very fact that there are some developers contributing and there's some miners being rewarded doesn't necessarily mean you automatically are a company or a partnership or any other default. So we typically think, okay, there's no specific either you're a company if you incorporate, whether it's a DAO company or traditional company. If you don't want to go and incorporate, you don't want to fill in the paperwork, you don't go to a government saying we're a company in your jurisdiction. The default in many countries would be, okay, in that case, you might be a partnership. But again, that requires that you fulfill the conditions of being a partnership. And if that's not the case, you maybe just be a network that is unregulated. It doesn't mean that you necessarily are a partnership with partners who face unlimited liability for anything that would go wrong in the Bitcoin community. But I think definitely that the first option, the Wyoming option and the Australian option, is what most regulators are tending towards. I don't think that will be the final answer for the reasons that you very well outlined.
Well, we did actually, but but it's definitely, action has to be taken. Like, it's better to act and then develop it from there, rather than sometimes to just take a step back. And these corporate law inventions, such as the Wyoming DAO, such as the Vermin DAO, Vermin blockchain-based company, give us a base to have the discussion. And then from there, I believe that there can be some really, really interesting corporate law frameworks that we do to see how we can create a better way of doing corporate law, especially on a more international level. And without getting too futuristic, this really leads towards understanding how corporate law will be dealt with in space as well, because we don't know, but there might not actually be different jurisdictions in space. There might just be one jurisdiction. And then how would you deal with DAOs?
That's a very interesting question. Never thought that far.
Because obviously this is definitely a good couple of decades away, but it would make sense for us to have DAOs and this decentralized way being the norm. Obviously, even in DAOs, there are centralized companies that make up the DAO, but the overriding organization structure and the umbrella structure, it would be interesting if that would be the norm there.
And so far, I don't know if the answer will come from these abstract discussions about, I mean, I struggle with those abstract discussions, like should a DAO be a DAO company, traditional company, just with some tweaks in the rulebook? Should a DAO be a separate type of entity that we recognize? Should a DAO, depending on the type of DAO, like you just said, the Bitcoin developer, should it be just something we know it's a group of people coming together to do something? It doesn't need to fit in one of the legal categories that we have, and we just accept that that's unregulated. But for me, it's much more. It's helpful. Perhaps that's how my legal mind works. Perhaps it's because I feel a little bit lost. It's changing so quickly, and so many things are happening. So many different types of DAOs. For me, it's interesting to look at a specific case study. Say, okay, if we look at Compound, if we look at Uniswap, if we look at any other of the big DeFi protocols, how does that work exactly? And what would fit, what would not fit? So for me, the abstract discussions, I can see why they're very important. But but I just get lost because in the end, I want to know what exactly is happening in this DAO, how it's being governed, who is contributing, and how does that mean it interacts with the meat world, the meat space, the actual world.
The meat space.
But I cannot give an abstract answer if there's so many different types of DAOs with so many different governance arrangement, but also not just what the rules are for the DAO, but how it actually being managed, who is actually developing things, who's actually voting, who actually holds a vote, how much of those how many of those governance tokens are actually freely distributed, how many are being kept, as you said before, by founders. Even if they're being freely distributed, do they end up in the hands of some? So for me, many of these abstract questions may fade once we look at a specific case study and then start looking at that case study, what would work for that one. And if we do that for many different case studies, perhaps we can see patterns. And perhaps that will help us go beyond this idea of, well, we just squeeze DAOs in existing company law.
Yeah. No, it's really, really, really good way of looking at it. And I think, as you said, they will emerge over time with the more corporate lawyers looking at these things and being able to take their existing knowledge and being able to apply it. Because at the end of the day, corporate law is just the law of understanding organizations.
Sorry, which one?
Corporate law is just the law of understanding organizations, how humans pull resources together, right?
Yes.
You can give it that traditional corporate law terminology, but it's just how do we manage interactions between humans that want to build things?
Exactly, and who wants what, and what if they disagree, and what if many of these questions are, as you said at the start, many of these questions are about agency theory run across so many aspects of human interaction. It's not just companies, it's DAOs, it's so many aspects.
And that's the amazing thing about being a lawyer, right? That we get to help at least understand how these interactions happen, right?
And that's the interesting thing about DeFi as well. I think DAOs, I think they challenge some assumptions we have commonly come to make in company law. We just assume things work a certain way. We just throw financial incentives at people and then things will work and we solve our agency costs. In DeFi, it's still very much game theory and financial incentives at the protocol level, software level. At the same time, you see communities around there that have much more that put social pressure on things going a certain way and not another. So you see a game theoretic financial incentive set of coding principles or rules, but those are complemented by the human factor, and the human factor is in these online discussions saying, this is not what we expected, can you change it? And you see it in pressure when a hack happens, saying, can you please give us back the money? I don't see that same interaction between games and I don't see people going to banks saying, can you please give us back our money? And banks go, oh yeah, sure, we're all in the same thing together. Perhaps in DeFi, that tightly knit community will go as well. But at the same time, I find it really interesting to see how the human factor and the interaction and dialogue saying, well, we expect something from you, don't betray us, how that's so important in DeFi. I think that's something that we've lost in the formalistic, legalistic company law approach, at least some dominant theories about that. So DeFi can teach us something.
For sure.
DAOs can teach us something.
And we're hoping that will continue, actually. I think just to round up, because I have just seen the time, it really boils down to the essence of blockchain in its first iteration, or Bitcoin, right? It's a social economic technology, which is why it's so exciting. It's one of the first technologies that effortlessly and beautifully combines social consensus with economic consensus. And we're seeing that permeate throughout the blockchain iterations moving forward. And maybe even when it comes to compliance, right? Maybe even compliance can be incentivized economically too, in the same way that Chainlink, for example, incentivize data integrity, right? So companies would have to like stake a bit of their tokens to say I'm compliant, and then when the auditors check it, as long as they're compliant, they keep it. But if they don't, then it gets slashed straight away. But these are definitely future discussions. For now, thank you so much.
Thank you for having me. It's great to hear your thoughts. in your
it's
question.
gone super fast. I know that we could have dived into so many other topics, but I'm proud of us that we kept it structured and succinct.
Thank you. Thank you.
But yeah.
And many more follow-up discussions, I'm sure. I'm sure there are many, but it's great that you were working on this. It's an important topic. So thank you so much for making this talk happen. You tickle my brain. You make me think through these things more, and I'm sure we can continue discussion elsewhere or with other people on this call or elsewhere.
Yeah, for sure, for sure. Guys, as I said, if you have any questions, feel free to send them our way. We're going to round up the call now. Feel free to reach out to myself on nathan@waseo.org if you have any questions. And also, is there any space that they can?
They can just find me under my name if you go to University of Cambridge and you look for my name plus University of Cambridge law faculty. You should see my email there. It's ascc2@cam.ac.uk.
Amazing. Thank you so much, Ilona, as well, for your time. Hope you enjoyed the discussion, and we'll make sure that this is up on YouTube later on next week as well. All right.
Okay. Thanks, Nathan.
I know that you've got a busy life, so we'll catch up later on. Enjoy the rest of your day, and
that's good. You too.
See you later.
Bye.
Bye.